Hey everybody, hope this finds you doing well. Let's go over what the vibes are like over this past week. There's a lot of chatter on social media, off social media, people wondering what is really going on with the US economy. We had the CPI and the jobs report come out this past week. Let's see what's going on with cryptocurrency. Of course, let's go ahead and start with Bitcoin. You can see Bitcoin is currently trading at around $68,000. It's down 3% over the past week. We have Ethereum down below 2,000, down 7% over the past week. Then we have XRP. It's actually up 3% over the past week. It's at $1.48. We have Solana struggling to get back to that $100 range. It is currently at $86, down about 1%. Then we have Dogecoin, the largest meme coin of them all, currently trading at 10 cents. It's up 6% than where it was a week ago. And we still have Bitcoin Cash actually in the top 10, just above Cardano, rounding out the top 11. So if we look at Bitcoin, a lot of the vibes are still very iffy when it comes to what Bitcoin is going to do over the next several months. We see here, looking at the monthly chart, that Bitcoin is currently down in the month of February. And if we do not get back above 78 and close above 78,000 for the month of February, then this will be the first time since 2018 that Bitcoin had 5 consecutive months of a downward trend. So what we're hoping for is to find some kind of support. We're not sure where that is just yet. Obviously, we dropped down to 60,000 a couple of weeks ago. So we're looking to see if we're going to keep in that recovery mode, trading between that $60,000 to $70,000 range, or we could potentially drop back down even lower. So it's not a surprise. Obviously, this is a bear market for Bitcoin ever since October of last year, and we have some healthy support in this $50,000 to $60,000 range. So there could be a possibility that if we're able to find some support in this range, and maybe we'll kind of trade around here for a little while before eventually heading back up, that actually would be healthy for Bitcoin and the price action. Obviously, a lot of people don't necessarily want to hear that, but this actually could be a great opportunity to continue to accumulate Bitcoin, as you're now having a 50% basically discount on Bitcoin. So wouldn't you want to have a 50% discount basically on anything that you buy, especially nowadays with how prices are? And let's go ahead and go into some of the macro when it comes to what's happening in the economy. So we see here that the US job numbers have been revised down by over 1 million jobs for the year of 2025. This is the largest annual revision in 20 years. So this math isn't mathing. A lot of people are very skeptical of what is coming out of the Bureau of Labor Statistics and a lot of these other numbers that are coming from the U.S. government with regards to the jobs report. We had a favorable jobs report for the month of January, where it looks like we added over 130,000 jobs, most of them coming in the healthcare area. But we're finding that the jobs and the numbers that are coming out, they have to revise them over time. And we're seeing that we actually didn't have as many jobs that were reported for the year of 2025. So obviously that is startling. Jobs are definitely an issue and a concern for everyone when it comes to a growing economy, and this is not looking good. So obviously we definitely have to take a lot of this information that we hear with a grain of salt. We really have to look and dig a little bit deeper, and really at the end of the day, we can see for ourselves what's happening. We can see that it's people are struggling out here when it comes to, paying their car note, when it comes to paying their mortgage, paying their rent, paying for groceries. We see that things are continually getting more and more expensive. And with inflation and with inflationary measures and monetary policy, if we continue to start easing again with regard to bringing more US dollars into circulation, then that's going to continue to eventually add to inflation. Now, and we just look at this chart really quick, as I mentioned. If you exclude healthcare, because we did have a lot of healthcare numbers, employment numbers come up in the past month, and we're seeing that non-farm payrolls, which is basically private payrolls, we've seen are doing very well, supposedly, at least from what we're hearing. But government jobs have lost a lot over the past several months. So we're seeing more in private employment, but less in government employment from what we've been told over the past couple of months. Obviously, over time, we'll eventually find out exactly what those numbers are. And you would think that it would be much easier to be able to figure out these numbers and not to have to revise. I mean, a million revisions, just really seems ridiculous. So there has to be a better way. You can basically look at these payment providers and these payment platforms like an ADP, for example, that handle payrolls, that basically can give you the numbers so we know who's employed and who's not. But you can see here, if you look at this chart, if you exclude healthcare employment, the U.S. has actually lost jobs since 2024. So this is not a good look. So definitely we have to keep an eye out on what's going on when it comes to employment, when it comes to inflation, because that really churns the economy and churns the market. So we definitely have to make sure that we stay on top of what's going on with the macroeconomic environment, so we have an understanding of what's going on in markets. So you can see here from Trueflation, they are an independent group that comes up with they're using their own numbers when it comes to the true inflation numbers, and they don't just use the government numbers. They also actually take data from other outlets as well outside of just the U.S. government. But you can see here that from the U.S. government, we got numbers this past week that the U.S. CPI is down to 2.4% year over year, and that is down from the previous 2.7 from the month before, and also better than expectations. And then also core CPI was 2.5, and if I remember correctly, core CPI is when you are excluding food and energy, because they can be a little bit more volatile. So we want to see that inflation is coming down. The U.S. Federal Reserve, that's one of the major metrics that they look at when they decide on monetary policy, and whether or not they're going to raise interest rates or cut interest rates or pause. And currently we're in a pausing cycle right now. So over the next couple of weeks, we'll hear more from the U.S. Federal Reserve, and we shall see over the next couple of months, obviously, if they decide to make a movement when it comes to the interest rate. So you can see regarding Trueflation's numbers, based on their data, they said that they predicted that the BLS would come in cooler than expected. And it's worth noting that in categories where the BLS still sees elevated inflation, which includes food as well as utility and shelter, we see significant and often persistent cooling, with food and housing categories already entering a slight deflation. So I don't know if that's particularly true in certain areas of the country. So obviously we'll continue to see how everything shakes out, but it's definitely very important that we have an understanding of what's going on in the macro, so we know what's going on in the micro when it comes to cryptocurrencies, when it comes to Bitcoin, and when it comes to these markets. So definitely make sure to stay tuned here. We'll keep you posted as much as we can. Also, we are seeing that big money institutions are still buying Bitcoin. So even though we're seeing this price action, Bitcoin being down 40-50%, we are seeing that the largest institutions are still buying, they're still holding. So if we look at the so-called smart money, they are holding Bitcoin. You can see, according to the 13F filings of Goldman Sachs, which is a multi-trillion-dollar asset manager and bank in the United States, they currently hold over 1 billion of the Bitcoin ETFs, over 1 billion of Ethereum, and they actually are holding more than gold currently. They also hold a little bit of XRP, some silver, and Solana. So this is just another indication of banking services and banking institutions getting into crypto. Not only are they looking to transact on the blockchain, but they're also looking to invest in the digital asset space. Once again, we've mentioned this before, Harvard, the largest endowment in the country, they also put in over $400 million into the Bitcoin ETF towards the end of last year. So we are seeing that the largest institutions are continuing to hold crypto, so, and particularly Bitcoin. And so we're seeing that Bitcoin isn't going anywhere. That's what we are seeing from the news and from what we're understanding and what we see from what's coming into the space. And as the space continues to grow, we're seeing that it's not going to be slowing down anytime soon. Also, when we look at the whales, for example, being wallets that own over 1,000 BTC over the past quarter, they have continued to add to their wallets. And so they've added over, I believe it's 53,000 Bitcoin, something of that nature, over the last several months. So we're seeing that holders of Bitcoin and large holders of Bitcoin are continuing to add and accumulate and take advantage of this dip. So make sure to check us out on Instagram. We'll check out here talking about the top 10 economies, and we basically every day show charts or provide a little bit more in-depth information with what's going on, not only with Bitcoin, but also with the larger economic landscape. And we'll probably do a video talking about what's happening with the U.S. economy and what's happening with the U.S. dollar and what we can do to try to store value and increase purchasing power. Because that's the most important thing, is that we want to increase purchasing power. So make sure to check us out on Instagram as well as X. Thank you so much for watching. We look forward to linking up with you soon on the Network Chain. Take care and happy stacking. Bye-bye.